Welcome back to another weekly market outlook. This is for the 13th to the 17th of November 2023. Let's recap last week. I don't think we have a lot going on last week. It's a little bit more qualitative in terms of the central bank comments coming out from the FOMC, ECB. But yeah, the RBA did hike interest rate by 25 basis points and kind of plays into our outlook last week where we say, if they do hike by 25 basis points but didn't really give any surprise to the market, we might actually see the XAUUSD gets pressure, and that's basically what we get from last week. But apart from that, I don't think there's anything much of significance coming up from last week. This week, though, we want to focus on a few things. Definitely the US inflation number. We are kind of expecting inflation to drop down a little bit. In the US, year-on-year headline inflation is expected to drop from 3.7% to 3.3%. This is going to get released tomorrow, as well as the UK inflation number. That's going to be on Wednesday. This one here is a huge consensus drop. 6.7% to 4.7%. That's a full 2 percentage point. That market is kind of expecting the inflation numbers in the UK to drop, and I think that is a huge ask. It's a full 2% drop that the market is kind of pricing it. I doubt that the market is already pricing this in, so it will be interesting to see how that inflation number coming out from the UK plays out. And I think this is probably going to be one of those market moving events, because just from the consensus, it's just too wide of the difference in terms of the the monthly change from last month. So it'll be very interesting to look at it. We also have the claim account change coming up from the UK on Tuesday, as well as the Australian employment numbers that's going to get released on Thursday, and then we'll wrap up the week with UK retail sales. Don't forget, we also have retail sales number as well as a PPI coming out from the US on Wednesday. So I think the main focus for this week is definitely going to be the inflation numbers, and retail sales will probably move the market a little bit, but that's not going to be the main focus for the market. And also, one thing to note for you guys trading oil, the crude oil inventories from the US crude oil inventories, that's going to be a market moving event as well, because previous inventories in the past 2 months, we have seen how it affected the market significantly as well. Okay, so let's take a look at the XAUUSD first, and you can see what's going on with the XAUUSD. That's that rejection at 65 cents. This is something that we talked about in the previous outlook, and we saw a very clean rejection. Market just dropped down from 65 cents all the way back down to the spot area around 63.50. Now we are going to be focusing around the 63.50 level, and we are also anticipating that price could potentially pull back a little bit towards 64 cents, but it's going to be really hard to break 64 cents. There's just a little bit of an order block at around 64 cents. So I think the pressure for the XAUUSD still remains to the downside. We are still trading below the Ichimoku cloud, and where 64 cents is located, we've got the weekly pivot at 64.10. We've got order blocks at 64 cents, psychological level at 64 cents, Ichimoku cloud at 64 cents as well. So there's a lot of resistance building up at around 64 cents. So I think if market does pull back a little bit towards 64 cents, there's going to be a lot of sellers looking to get into the XAUUSD. But again, focus would be on the 63.50. If we break below 63.50, anticipate price to progress lower. We're going to be looking at 63 cents, where the support one is also located, and also where October has been well supported. But below that, if we saw a much stronger selling pressure, we're likely going to break 63 cents. We're going to be looking at further drop to the downside for the XAUUSD. Next up is the EUR/USD. EUR/USD remains within the ascending channel that we see here, and this is the channel that has been established since the month of October. So 1.5 months, Euro USD has actually been traded within this ascending channel. Rejection wise, we take a look at where price was rejected. It's pretty much at Ichimoku Cloud. It didn't actually surpass 1.07, and right now this week we are also going to be looking at 1.07 as kind of the order block that we're looking at here. I think that's going to be a little bit more of a liquidity area around 1.07, so I think that there could be a lot more sellers waiting for an opportunity to short Euro USD at 1.07. So we'll definitely want to keep an eye out on 1.07. But apart from that, this is going to be traded within the ascending channel. This is going to be traded within the Ichimoku Cloud, so I'm not expecting crazy movement with the Euro USD. I think we're still going to be looking at Euro USD trading within this range at this point in time. Support to the downside remains at 1.0650, and for as long as price is traded between 1.07 and 1.0650, this is still going to be considered to be a range bar market condition. If it does break 1.0650, the next stop, the next level of support that we're looking at is going to be at 1.06, and it's still going to be within the Ichimoku Cloud. So definitely keep an eye out on the Euro USD here. Pound USD, we pulled back 1.23, 1.2350, that green box that we've been keeping an eye out for, and price basically just got rejected. It's also a rejection from the Ichimoku Cloud. We are currently below the Ichimoku Cloud, below 1.23. We have a little bit of a support coming in at 1.22, but again, that's pretty much it. If we lose 1.22, it opens up further drop to the downside for pound USD. We might be looking at a potential drop towards 1.21 and even 1.2050 on the pound USD. Now, next up is the dollar Japanese yen. This one here has a lot of strong support. Last week we talked about price. We're looking at around a price range where buys might come in, and that's between 149.50 to 150. We basically saw that happen. Price got lifted up, and we now have a stronger support base at 149.50, 150. Beyond that, immediate support is likely going to be located at 151. If we take a look at where 151 is, that's a psychological level. There's also a little bit of a gap that builds up at 151. So we definitely got to be keeping a keen look at 151 this week. I think that level, we saw bounces coming off 151. That level is still going to be above the weekly pivot. It is also a psychological price level, and I think we might actually see that level as a stronger support. Now, in terms of how far the dollar Japanese yen can go, we are looking at 152 at this point in time, but judging by the resistance 1 and resistance 2, this is not drawn on the chart, but this is exactly where the 127.2 and 161.8% Fibonacci extension is located. It's located at 152.25, and beyond that is actually located at 153. So I think there's still going to be a little bit more room to go for the dollar Japanese, and the fundamentals doesn't change as well. We still have a little bit more of a hawkish FOMC, and the Bank of Japan, that's sounds a little bit confused, right? They're technically, they want to be dovish, but they're acting a little bit more hawkish. They're a little bit confused at this point in time, and we don't actually have official confirmation of their monetary policy change until 2024. And until that happens, we're still going to look at the interest rate differentials between the FOMC and the Bank of Japan to remain intact at this point in time. All right. Next up is gold. Gold, we anticipate a little bit of a pullback. The formation that we saw last week, it was a flag, and then it was an ascending channel. It falls into a reversal pattern for gold, and we basically got that. We saw price pullback, and in terms of anticipation where it's going to pull back, we say it's going to be at about 1930, 1950. We got exactly that. We are actually at the lower end of the 1930. So in terms of, can gold drop down even further? If we break below 1930 and we didn't actually come back up above 1950, the current zone that we're looking at, which was the previous area, this is going to be the resistance area for gold, and then going forward into the future. So if we fail to go back above 1950 and we continue to break below 1930, there is a lot of room to go for gold to the downside. We're actually going to be skipping 1920. We are actually going to be eyeing a return towards 1900 and around 1895 area. This is likely going to be the stronger support area for gold. Now, oil, this one here, we cleared out a lot of blocks here. Okay, so In terms of the area where we saw buyers coming into the market, that area is actually around $82. Now we kind of ranged that up from $80 to 83. That's the orange block, the bigger orange block that you see here, and we actually break below it. Now price is currently trading around $77-76 at this point in time. We are going to be looking at $78 as the immediate resistance for oil, and if price is unable to break above 78, we're likely going to see more selling pressures for oil at this point in time. Now obviously the US crude oil inventories is going to play out. It's going to help move the market. If we have a higher inventories like the previous month, then yeah, I think there's a lot more selling to go for oil, US oil, NYMEX at this point in time. All right, so with that, good luck with your trades, and I'll see you soon.